I'm Matt Bishar with Nareit here in Hollywood, Florida for Nareit's REITwise, the 2018 Law, Accounting, and Finance Conference. Joining me today is Keith Townsend, partner and head of the capital markets and governance practice at King Spaulding. Keith, thanks so much for joining us.
Thanks, Matt.
Now, as you look at the market today, what advice would you give to public non-listed REITs or private real estate companies looking to test the public waters?
Yeah, Matt, I think if a lot of companies that are evaluating an IPO or another capital markets transactions are probably in a multi-track situation today where they're thinking about an IPO, but they may also be looking at M&A or other strategic alternatives or even seeking private capital. And I think if they're going to do that in a meaningful way, they're going to need to engage with seasoned real estate investment banking professionals, because step one is really understanding valuation, understanding what their story to the public markets is going to be, and understanding as between those various alternatives is there arbitrage between one or another. And I think if the answer is yes and an IPO is a viable alternative, that I think the next step that they're going to want to do is go down the path of developing their story. And that can take time. It's not something that happens overnight, and for some sectors it's probably going to take longer than others.
Now, switching over to shareholder activism, how have you seen activists impact the REIT industry?
So if you look at going back to, say, 2010, there were really only two meaningful REIT activist campaigns, and over the course of the last 5 years, if you just average those years out, and this is throwing settlements out, just the actual campaigns, it's been over 15. And that's when you just look at the number of publicly traded REITs out there, that's a meaningful number. So yes, I think REITs are no longer impervious, and they're going to have to be ready with their advisors for these campaigns to occur.
And picking up on that, what should REITs be doing to prepare for any potential activity?
Just recognizing that they are vulnerable. I think that you think about first, it's an assessment of, am I vulnerable, right? And I think that fundamentally, going through some type of black hat analysis where you understand, okay, if someone is going to come knocking at the door, if the activist is going to show up, what's their thesis going to be? And you need to understand the thesis and be prepared to address the thesis before it occurs. So I think that's really step one. And it's interesting, just when you think about the dynamic, even for REITs with the ownership limits built in today, it's very common to have less than 10 shareholders owning 40 to 50% of the stock. And at the same time, you couple with that a phenomenon where institutional investors over the course of the last 3 or 4 years have become much more willing to actually cooperate with activists and at a minimum be empathetic to some of the things that the activists are asking for. So what's that resulted in? Well, a number of CEO changes, and that's REIT land, but that's companies more broadly. Massive share buybacks, M&A activity, divestiture, and major corporate governance changes. And I don't think that's going away. And at the same time, there have been a number of settlements, and this is the REIT industry, but again, it's more broadly. And what's frightening about that is if you look at the data would suggest that after you settle with an activist, typically in exchange for a short 1-year standstill, what's happened is that the CEOs in those scenarios are about 3 times more likely to get replaced after an activist comes on the board. So it's tough, right? And so I think the best thing that you can do is try to make it not happen, right? And I think in addition to that black hat type analysis, the other thing that we're seeing more and more companies do is to use their proxy statement as an advocacy document. And if you look at proxy statements 10 years ago, it was companies would say, okay, we're going to do exactly what the rules require and nothing else. And today, companies are taking a broader view, right? They're thinking about what was addressed in this year's BlackRock letter and last year's BlackRock letter as an example. They're looking at the ISS voting guidelines. They're thinking about Green Street. They're thinking about their largest shareholders. Do they have particular sensitivities? And they're addressing in the proxy.
Keith, thank you so much for joining us.
Thank you, Matt. Much appreciated.
For more from REITwise, be sure to visit Nareit's website, REIT.com.